had a note on here, okay, it ties to the confirmation. And then ties the trial balance. And then we would have, normally we'd have tick marks. I think we just did this quickly just to show it, but. So that step in the audit program, we said obtain bank reconciliation and review, you know, the, does it, whatever the wording is, does it foot down, does it tie the trial balance? That's what we're doing here.
So client gives you this work paper, and, you know, if we just did a review, we would just check that, yep, it agrees, and go on. If you're doing an audit, you have to perform tests. You have to verify that your bank balance. If you guys talked about confirmations, yeah.
We just talked about receivables confirmations, and we're getting ready to talk about bank confirmations next week.
Here's bank.
You're gonna get we're gonna get a primer for you.
There you go, because we're really pressed next Tuesday, so you can go ahead and just teach the chapter for me.
Okay.
Remember everything they're telling you? Here's your chapter 23 lecture.
Here's an example. This is old school. Okay, this is a paper confirmation. This is where you send this form to the bank, and the bank says, okay, yes, they have an account. Here's the name of the account. Here's the account number, and here's the balance they had at the end of the year. At 12/31, that's the balance. 254, 725, 61. Well, if you remember back on that bank reconciliation, that was that first number we started with. So you're testing that client's work paper by getting outside evidence from the bank that that's the right starting number. Now, these are all done electronically now. There's a program called.
Not all are done electronically.
Well,
we're trying to move that.
most of them are done electronically, where you send it and you get an electronic confirmation back, so that old school sending out the paper don't have to do it anymore. But that's a bank confirmation.
And notice, we've talked about this too, that you're not only confirming the deposit accounts, the bank deposit accounts, but any loan accounts in number 2. And they've blocked out name and account numbers on there. You would also see account numbers listed, whether you fill them in or have the bank fill them in. But you're killing two birds with one stone, confirming the bank balances and debt held at that bank as well. So now you've just confirmed a bunch of your big chunk of your liability section as well.
The best audit evidence you get is outside confirmation from a third party. So when you look at your level of audit evidence, that's the highest level of evidence that you can get. Same with the bank accounts receivable. Okay, you get accounts receivable confirmation. You know, this customer is saying, you know, this outside third party is saying, yes, I owe XYZ company $10,219.27. Boom. And that's what the client has.
Yeah.
Hopefully.
And this, I think, is an example of Zoom.
Not fixed assets.
Yeah, I'm trying to zoom in.
Oh, jeez.
I'm sorry.
Well, I'm laughing at me. I somehow had my face in my
At the
camera.
top, to the left, right.
Percentage. It has a
See,
drop
right
down.
there you go.
Oh, I was looking for the name tag box, okay. So this is a list of like, okay, we added these during the year, let's say. And the check mark is gonna say that we traced everything over 15,000, so that means we went through and traced, we got invoices for them. Or we might say, hey, the company might say, hey, we bought four cars this year. So we might get titles to the car or something like that. Or we bought a new machine this year. Well, okay, you have an invoice for it, you have something, here's the agreement we signed, okay, we'll trace to that. So we didn't trace, notice we didn't trace everything. We decided we're gonna trace everything over 15,000. We could trace everything if we deem it necessary, but a lot of times we might say, let's just cover, you know, what we traced covered 80%, so that's close enough. Unless there's additional risk, in which case, then we need to do everything. I don't think we have any other work papers. So, all the work we do ahead of time in the planning results in the audit programs, and then that drives, when we're out doing the field work, that drives what we're gonna do, the procedures that we're gonna do, what we're gonna ask, what we're gonna get, what we're gonna put in the file. So it all starts with those questions at the beginning and results then in the audit report. ultimately, that audit report should be shown at the beginning. That's the ultimate result.
And you-
Why don't we go up then to, go.
I was just gonna show them the numbering system. For your work papers are organized, every area has a number, so cash is section 21. I don't remember what chapter we talked about it with lead schedules. I know I mentioned it to you, but, do you still use lead schedules? It's
We do
still
our
in the
formulas,
books.
like for the, we take from the trial balance to the financial statements.
Do you have some of those in there to show
I
them or
don't know if I
not?
formulas set up, I don't think we do.
We have
because-
it, a lot of times we have it in our trial, we have a trial balance that has the lead sheets
You know what, maybe
and
it's
kind of
a-
incorporates it.
So it's basically summarizing all the general ledger accounts for every line of your financial statement. So here's all my cash accounts, there's the cash number on the balance sheet. Here's all my receivables accounts, here's the number on my balance sheet. So you track those section by section. Cash is section 21, receivables is 24, inventories is still 26.
Yeah.
You don't forget
Apparently,
these
it's like
things.
6 year time too.
It was.
Yeah, some firms, I think, like use letters or something, like we just always use.
Yeah, our textbook shows it with letters, but I'm so used to numbers, it's hard
It's
for me
weird
to
when
do.
you see the number
letters.
outside of, even like when I see the number 26, no matter where it's at, I think inventory.
Exactly.
So I blew this up so much, but yeah, so then this would, if we are preparing the statements for them, for a client, which again, we do for 90% of the clients we have, because they're not huge companies. We kind of use this then, and we take it, we put it in our software, and it generates a trial balance. We take their trial balance, put it in ours, generate lead schedules. That makes up financial statement line items then. So 26, there's like a formula on the statements themselves, in our internal statements, that then, that's how we define, okay, that's inventory. Tagging it with like 26. And this groups it all up.
And then it feeds into your,
In the financial statements. I don't know if we have.
See, I don't.
you used to have a set in there.
Maybe we do. We had to convert everything over because
There.
it's software.
Oh, so they
See,
are
the
in
new
numbers.
software doesn't, you see, we.
Well, it might. We have to recalculate first. Or it might not.
That's okay.
Good
Yeah,
that's the
it-
formula.
It pulls everything for them from those work papers. And do you guys often get an Excel trial balance
Yeah.
to import into your software?
Yeah, usually we hope we do, because sometimes we don't, we have to type it in.
Holy cow,
Yeah.
2018 typing in a trial balance, I don't think so.
We had a client I used to have that, they'd send the trial balance digitally, but it was like a scan. And this is before we had more than one monitor, so you'd have to like get the account and then minimize it, type in the account, the balance, then go
Oh
back
my
and then,
gosh.
so now we have multiple monitors, so it makes it a little easier. But
You don't still have anybody with paper general ledgers, do you? With books on paper? Could there
I
still
don't
be any?
think so. I don't think so.
Not many.
Now, go to the, okay, what makes a complete set of financial statements?
Tell them Mrs. Atkinson. if
We don't
you
have
guys
a complete
know
set
that.
here, but.
No, I don't,
Okay.
They know.
Income statement, balance sheet, cash statement, cash flows, retained earnings.
And
Or shareholders.
one more,
And what's the other part at the end?
Shareholders equity.
Well, after that. After the parts with the numbers, what's the other big thing you need? The disclosures, the footnotes.
footnotes. Now, one thing that we do, yeah, disclosure
Footnotes.
checklist.
No,
Oh.
we'll put this up.
Okay. So then here's some, that's an old report. But here's, where our clients will, help prepare the footnotes and go through that whole process. And we have it in a Word file and, we incorporate that in our program. Now, go to the, one of the things that you have to do then too as an auditor, okay, say your client prepares the footnotes and the statements and all that, wild example. You have to make sure that they have all the disclosures and they have everything's properly reported in accordance with GAAP. So we have this program here, it's a disclosure checklist. And again, when it used to be by paper, remember how thick it was?
Worst
Jonathan?
part of the audit was the checklist at the end.
Yeah.
Ugh.
This is this program right here, if you go through, okay, you almost have to do it last, because you have to do all your auditing and know all your numbers and everything first. Then you go through here, and if you complete this properly, when you get to the end, you'll have a complete, accurate set of financial statements prepared in accordance with generally accepted accounting principles. Okay? So then, this right here, it talks about cash. Okay, if you have a restriction on cash, is it properly disclosed? Yes, no, or not applicable. Do you have material bank overdrafts? Well, if you have an overdraft, you can't be in the asset side, you have to have it on the liability side. So, you know, and it goes through, kind of reads through your balance sheet. So like you have your cash, then you have your notes receivable. Click on notes receivable, notes and accounts receivable. You know, you have all your significant categories. You know, is the allowance for doubtful accounts disclosed? You know, a lot of times you'll have a footnote on if you have an allowance for doubtful accounts. You know, then you have, go to like part, you know, this walks all the way through your balance sheet, and you get it, and it gets into some very complicated disclosures, because it can be quite complicated. It's, you know, this is a very basic statement that we're showing you, okay?
Fair value one is huge, you know.
Fair value, yeah. It's huge. Contingencies, commitments, illegal acts. You know, if you click on the illegal acts, if you have a situation, material revenues derived from transactions involving illegal acts, you know, is that disclosed? Then you have,
Of course.
You have part two. Go to part two. You know, here's part two. This is additional disclosures on, you know, if you have environmental remediation, there's a question on there. If you have if you have an EPA, you have a spill, and you have a liability you have to record for that cleanup, you have these disclosures related to that. So
It actually gives you examples too.
yeah, now, yeah, if you get on and go, okay, well, what would I, you give me?
It's supposed to have examples. Might not have examples. Okay, well, maybe not.
Okay, well, anyways,
It's an old checklist.
it's all check. It'll give you an example disclosure. Now, you know, you get an example, but you usually have to tweak it. And this is gonna laugh. I love writing footnotes. I know, it's fun. But the objective of a good footnote is to sometimes to take something that's extremely complicated, and you might have a 50-page agreement on this, on a situation, taking that information and consolidating it, putting it into a narrative that person can pick it up, read it, and have a general understanding of that situation or that example, that disclosure. So it's, you know, when you talk about accountants aren't really very creative, they can be really creative in writing footnotes and disclosures. And so that's one of the things that,
So written and verbal communication are super important for accountants, right?
extremely, extremely, yeah,
So even though this isn't an English class, I can help them with their writing and speaking, right?
absolutely. Because you have to be able to communicate.
Mhm.
Clients expect you to communicate with them. You know, you can't always just, you know, send an email or send a text. You know, I kind of tell people, you know how, you've heard who, you know, Al Gore invented the internet, right?
Of course.
You know that? I invented the WalkNet. Okay, the WalkNet is where, I know. I know. Where I get out of my office and I walk down to Andy's office, I talk to her. We communicate, we talk face to face. So it's important to make sure you have that ability to communicate face to face. Writing, you know, you send an email to a client, don't use BTW or LOL or emoticons or you know, type of things. Keep it business, keep it professional. and keep it simple.
Save that for the internal emails.
Yeah. Yeah, that's different, so.
Oh.
So,
You guys have any questions? for
Questions?
us? Anybody?
we tried, very quick, we could have had another hour or
Very
two,
quick and dry.
you know?
Easy.
But, you know, again, the objective was just to kind of give you some real-life examples that what Mr. Mitchell is teaching you is what it really is like in the real world. It's here. This is what he's saying. This is what he's teaching you. You have to know. You have to have that understanding to do it.
You guys like auditing? Are you glad you're in auditing? Because
Yeah.
I try to tell them some parts of it are super dry and tedious and dull, other parts of it are super fun, and the entry level parts, you're doing the grunt work and all the check marks, and when you get a little higher up and you get to dig in and analyze stuff and you're running the jobs, that's fun.
I like it overall. It's a different set of challenges than if you just do tax, because especially like this time of the year, you're jumping between 4 clients maybe. So you have to remember, okay, this week we're at ABC company and they do things this way, and I have to ask for this report, and I have to wait for this person to be there. Well, next week I'm at DEF company. Well, they do things a certain way, and I have to remember, oh yeah, I can't mention this because that's not how they do it. I have to ask for the cash reconciliation report and not the bank reconciliation. That's what they call it out there. And then you might jump between industries too. So this week I'm on an oil and gas audit, and then the next week I'm out at a manufacturer. Well, that's 2 very different things. And then to top it off, I might be in the office in the morning and then go out to the client, and then other times I come back in the evening. So it's kind of hard to like mentally to, you know, set up in the morning, pack everything up, come out to a client, set it all up, work for a few hours, pack it up again, go back to the office, unpack it. So psychologically it's different than if you just did tax returns all day, which that has its own challenges. But the other thing with doing a lot of audits is you're in front of the clients. So you have to remember, okay, I'm out of client. You have to be careful what you say. You have to be careful how you ask questions. You don't want to look like an idiot. The thing I struggle with sometimes is I don't want to change too much or ask too many questions because it may have been something that Franklin discussed with him already, and I don't know. Well, I don't want to go in and say, why do you guys do it like this? You should have this account. And they say, well, Franklin told us to. Well, now I look bad and Franklin looks bad, and then they're like, well, they didn't communicate with each other. So you have to kind of be careful. A lot of times I'll ask him ahead of time, hey, do you know anything about why they do it this way? If he says no, ask him, then I'll ask him. But there's times where he's set things up already with a client, and then I kind of I'm auditing it, but I already know he's looked at it, you know. So that's a struggle, and so it is tough a lot of times just being out of the office, because I have everything I need in my bag. Like I'm working out of my bag more or less. So in the office you just have more stuff, and it's easier, and it's in a way it's less stress. It's more stress because you're in the office, so then you get bothered with multiple things and people talking and whatever. But out of client too, there's that stress of always, I can't really relax because I'm out of client. So you have to appear busy. Like in the office sometimes, like, well, I'm waiting on them to send it to me, so I'm just gonna I'm gonna have a donut, I'm gonna talk to somebody. If I'm out of client, I have to appear busy because in their minds they're thinking, well, I'm paying, $150 or $200 an hour for you to be here. You have to look like, even if I don't have anything, I might look at Frank and be like, I don't have it yet, Well, we'll just keep busy, just I just go through disclosure checklist and maybe work on that and appear busy, It's stupid things like that, but it is a different kind of challenge than if you're in the office all day.
So you can
that's my
always work on
experience.
another client's
Yeah.
work even.
Very carefully.
Like
you
when
have
they
to,
work on their homework or their other classes, but pretend they're listening to me. You know how that goes.
Yeah.
Same
Yeah,
thing.
exactly.
We don't know what they're really doing.
We have a program called Skype for Business, where Andy could be out with a client, I'll be in the office or at the beach or whatever, on my laptop, and he could ask me a question about the client, about that account real quick, and I can give him an answer right away. And so that
Well,
helps.
he can see because it's cloud-based, so he can get in and look at a work paper too. If I say, hey, I can't.
That's what we didn't talk about. Talk about that. That's really cool too.
Cloud-based.
Yeah, how he can get in and see what you're doing. He can write notes. He can review the audit while you're
Yeah, well,
out of-
everything we have
You
is,
can even be in another city.
this is our home screen. So this is kind of our cloud base, more or less. And then, so we can both be in the audit file. He can see this work, well, I can't see it, he doesn't have to open it, but I can pull it up, he can pull it up, or I might say, hey, I'm having trouble on work paper 5301, I can't figure out why this doesn't reconcile, or does this look okay to you? I'm finished with it, are you good with this? Well, he doesn't have to be there anymore. In the old days, they talk about the old days, you know, paper, he had to be on site to see it, because you know, I call him, I say, hey, you can't see this, but I'm done.
We didn't even have fax machines when
Yeah.
we started. I mean, you couldn't even fax something to
So now
somebody.
he can review a lot of stuff from the office before he even comes out. Or look at it and go, we'll talk about it when you get out, when I come out, but I think you need to change this, this, and this.
And you can
see
write
it.
notes right in there.
Yeah.
Oh, yeah.
You can write review notes. right
Yeah,
in the
I put
software.
open points on there,
That's
and
cool.
that's how we, you know, we review them, add a note, boom.
So now
See, it shows up as a note over there. Down at the
Oh,
bottom.
the little one.
Yeah.
Yeah.
Yeah,
And then do you
down the
clear it
bottom.
after you've taken care of it? Or does Franklin
You
clear
can
it?
reply or clear it. So I can say, done. And
Again, this is the neat thing that has changed
Yeah.
so much over the years. So, again, it's wonderful. I love accounting and auditing because it's logical. It all has to make sense. It's all got a balance. It's like a big puzzle, and if something in that puzzle is out of whack, it's just gonna mess everything up. It's not right. So that's what I look at it, auditing as a challenge to make sure everything balances and makes sense. You know, so that's what I love. And I just, accounting profession, the accounting, you know, you guys are probably all going into with what, associate's degree in accounting, right? Accounting, you can do a lot with that degree. You can go into different industries, you can go into banking, you can go into all aspects of business. You know, every business needs to have an accountant. Because if they don't have, and the accountant's role is extremely important. Because if a business owner or a manager or whatever, you know, does not have good information, they're not gonna make good decisions. And so accounting is extremely important to have accurate information so that good decisions can be made. So,
And a lot of our students end up getting bachelors and masters, and you still think that's a good plan?
Oh,
ultimately?
absolutely, ultimately. In fact, we have, you know, we've hired, over the years, 2 people from Stark State. One person she's been there for a while, and she went into, you know, industry, kind of changed, you know, her mind. The other person, Seth, is still at our office. He's got his CVA, so he does business valuations as well. He was sitting in your seats a long time ago, you know. So, you know, we think very highly of Stark State's program. I'm on the advisory board. I wasn't able to make the last meeting. I apologize. Sorry.
It's okay. You can tell he has lots to say. He's a very valuable member of our board.
Anybody have anything else? They've got another class to get to.
Oh.
Any other questions for these guys? Don't be shy. What are you dying to ask about? Can I have another donut, of course? Mitch, you have a question?
No, I think he about covered most things, so.
All right, well, let's thank our guests for coming. Awesome presentation. I hope everybody enjoyed this and learned something new, and hopefully it brought some of what you've been learning to life. So, all right, thank you very much.